Good morning, good afternoon, good evening all, and welcome to our Treasury Lab on going paperless, practical steps to trade digitisation. So for those of you who don't know me, my name is Duncan Lodge. I'm responsible for traditional trade globally at Bank of America, and I also manage supply chain finance globally on an interim basis. When it comes to trade digitisation, it is no doubt a very familiar topic for many on the webcast today. Efforts have been underway to take paper out of trade finance for many years now, with sometimes limited success. And the challenges associated with these products are quite wide-ranging. Many trade transactions have multiple counterparties, all of whom have to agree to go digital. And of course, there can be a transfer of title to the underlying goods, which needs to happen in both a secure and legally enforceable way. Add to that the challenges for banks and companies in figuring out how to interact digitally, in other words, via what platform or medium, and it's no wonder progress has been slow. But some of the key ingredients that are required to digitise trade are finally starting to come together. The first is market impetus. The last 18 months have seen a huge acceleration in efforts to drive digitisation due to the COVID-19 pandemic, as companies have had to wrestle with the challenges of managing complex and often shifting supply chains, all whilst having staff working from home. Using paper has become, in some cases, not just impractical, but impossible. The second is focus from governments. In April, we saw the G7 announce that an agreement was reached to develop a framework for the use of electronic transferable records, which, coupled with a digital rulebook, is a fundamental building block for the digitisation of documents like the Bill of Lading and the Bill of Exchange. The third and final ingredient is the ongoing shift in approach to technology development within financial services. And that shift is the move towards ecosystems, where numerous counterparties come together to focus on specific issues associated with trade and trade finance. And what often goes hand in hand with these ecosystems is blockchain. And blockchain and distributed ledger technology has played an important role in making the digitisation of trade more tangible, as it provides a highly secure way of transferring title. And in the case of trade, that means the secure transfer of digital versions of documents like the Bill of Lading in a very automated way. Now, all that being said, it is really important not to lose sight of the fact that digitisation in trade doesn't have to be big bang. In other words, you don't have to digitise everything at once. And as we race towards a world where transactions may finally be 100% digital, there are practical steps that can be taken right now to reduce paper and streamline trade finance processes. So to help me talk about the here and now and give some insight as to what's next, it gives me great pleasure to welcome our panel today. First, we're joined by Toby Shaw, Senior Director, Group Treasury, Risk and Insurance at Emirates Global Aluminium, or Aluminium for the Americans in the crowd. And we have Rob Barnes, CEO of the Polo Network. So could I start by asking you both to give a quick introduction to yourself and your company? Toby, could we start with you?
Perfect. Thanks, Duncan, and thank you again for the opportunity to be here today with you and with the ACT yet again. It's great to see it back and in full force. Toby Shaw, the Group Treasurer for Emirates Global Aluminium, located here in the Emirates of Dubai. I've been here 13 years. We are the world's third largest producer of aluminium and the largest producer of value-added products in the aluminium space in the world. So it's quite a big operation. We run two smelters, one in Dubai and one in Abu Dhabi. We run an alumina refinery for 2.2 million tonnes in Abu Dhabi, and we have a 12.5 million tonne bauxite mine in West Africa in the Republic of Guinea.
Excellent. Thank you very much, Toby. Rob.
Hi. Thanks very much, Duncan. I'm Rob Barnes, as Duncan said, the CEO of Polo Network. Polo Network is digitising supply chain. And what does that really mean? We're taking the opportunity with the emergence of new technology and actually the emergence of underpinning rules, as Duncan alluded to in his opening address, to actually provide a framework to actually and methodology and technology to digitize that supply chain. And we're talking about things like taking purchase orders and invoices and having smart contracts, agree the rules, and then have them approved and then execute additional information such as bills of ladings, maybe quality certificates, etc. And then have all of this being provided by maybe third parties, which again would then validate onto a smart contract, which creates a much faster, simpler, less risk and less cost to the actual to the participants within that supply chain. All of this is happening across a sophisticated blockchain and happening in a way that we keep track of data residency and the provenance of the underlying transaction.
Great, thank you very much, Rob. So Toby, starting with you, if I may, as a company with a global supply chain, could you talk us through some of the practical challenges you have faced when it has come to trying to digitize trade finance and your wider procure-to-pay processes?
Yeah, thanks, Duncan. Look, I think the biggest practical challenge or impediment to full digitalisation or even partial digitalisation is that not all platforms are created equally. With most banks, financial institutions, etc., understandably investing in their own proprietary technology in order to ensure stickiness for their customers, and most corporates looking for bank agnostic solutions, multi-bank platforms, there's a discrepancy between the two parties. And I think that's the biggest inhibitor we have today in terms of moving forward at a great rate of knots on that digitalisation, not just of supply chain, but general treasury per se and business. We do find that, and again, quite rightly, many companies are reluctant to collaborate or cooperate with peers or competitors, as they might see. Introduction of blockchain has been slow to be taken up. There's some, what we would see from a corporate perspective, at least anyway, some very, very quick wins with that technology, such as KYC requirements, regulatory requirements. That seems to us, at least from a corporate perspective, some very, very low-hanging fruit, but would require a majority of the FIs in the world or the banking institutions in the world to actually agree on a common standard of reporting and a common standard of requirements. So until we get that alignment between the players on one side and the corporates on the other, full digitalisation of those sorts of things is very, very difficult to achieve. What we have been very successful at, certainly during the pandemic, is the adoption or the adaptation to work from home. And we've seen a lot of the banks, a lot of counterparties accepting DocuSign or electronic signatures now, which has been fantastic and certainly enabled business and trade to flow last year. And I think that would be the biggest challenge that we would see coming into the future, whether that acceptance of those electronic forms continues to be the norm, or we revert back to what was the norm.
Great, thank you very much, Toby. That's really helpful. So staying with you, could you share with us some of the successes you have had in reducing or removing paper at your company? And I think you kind of started to touch on this, but do you see these successes continuing once life returns to something approaching normality?
So look, we've had a big digitalisation process in various parts of EGA as a large manufacturing company for some time. If I'm looking purely at where we are today, we've got a company-wide initiative to reduce paper. And so there is project teams set up right through the company with the whole intent and purposes of reducing our use of paper. And that goes down to education, to awareness sessions, to training, to promotional literature, and even down into something that I've not seen before in the region, but may be familiar with a lot of people, is actually having to put in your employee ID and passcode to actually print. And that's not necessarily as a deterrent, but it's more as a forcing people to actually think about whether they need to print that piece of paper, whether they need to print that document, or they can file it electronically. I've been working for far too long, and everyone's always had the aspirations to have a clear desk policy. All I see is just more and more accumulation of paperwork. And I think part of that comes down to increased regulation, increased corporate governance, and certainly one of the fastest growing areas for us is our regulatory compliance. And so there's a natural tendency then for people to still trust a piece of paper rather than electronic forms. And I think that really is changing with the new generation of employees and the population embracing that technology. And I think that can only get better. On the Treasury front, we've been a big embracer of digitalisation for a number of years now, and that goes all the way through to our straight-through processing for FX payments, which goes straight through our ERP system and into a multi-bank execution system without any human intervention. Once the trade is executed, it flows back into the ERP system, whereby there is automatic rules-based systems in place to do the hedge accounting. We do auto trade confirmation matching. So again, we're trying to reduce paperwork and manual intervention wherever we can. Finally, I think on our payment platform, we're transitioning from a host-to-host environment to a Swift platform in phase 1 for our payments and our collections, and that will then follow with phase 2 for our inward and outward bound trade finance docs. And so we'll be working with obviously our providers around that space to actually develop that capability into the future. Our reporting, again, massive amounts of paperwork that goes into reporting. We've tried to digitalise that as much as practicable and do away with the paper-based reporting and going to an online, fully automated, real-time reporting dashboard structure. Part of the difficulties we have with that is data integrity, which you have anyway, and so it's not necessarily a panacea of all evils, but certainly if you can get the structure right and you can get the data integrity correct, it's a very powerful reporting tool. We overlay that. Sorry,
Toby, sorry, please.
No. And then finally, we overlay that, like probably everyone else, with a desire to maximise our efficiency and to have our employees doing more with less, but more value-added work. And so we're a big proponent and utiliser of robotic process applications, RPAs. And in Treasury alone, I think we've got maybe 60 to 70 processes that are under development for RPA work, and we've probably got about 30 or 40 active RPAs running primarily at the end of a trading day or at the end of the month or the quarter. We can run those RPAs of a night time, outside of work hours, etc. So the data is ready in a usable format for when the users come in the next day. I think probably one of the biggest challenges that we have coming up, and we're starting to see some creaks in that already, is the acceptance of what I alluded to earlier about electronic signatures. We're seeing more and more requests to revert back to ink signatures. I had one this morning that we put it through the DocuSign system, had 3/4 of the signatories already signed up to that. We were then told from the counterpart that no, that they required ink signatures. For the last 18 months, that was acceptable. So it's really trying to push back this tendency to go towards what was the historical norm.
Yeah, and I thank you for that, Toby. I think that that's particularly important, isn't it? That we may see some sort of reversion as normality returns, driven by perceived risks and benefit, and outweighing potential benefits. And I think as an industry, I think it's really important that we continue to work very collaboratively with corporates to make sure we continue that focus on digitisation and streamlining. So I think that's a good segue to Rob. I mean, Rob, Toby talked about some of the issues he has continued to face when it comes to trade digitisation and indeed wider digitisation. And I think he talked about the rate of change taking place, and banks are struggling to keep up. They're still investing in proprietary technologies, and I think also we think about information security as a sort of as a concern here. How can technologies like blockchain play a part? And is the market now ready for blockchain as well?
Yeah, that's a good point. So I guess where we focus is more the external ecosystem than the internal ecosystem. Although the benefits to the internal ecosystems within a corporate, particularly the buyer and suppliers, is there are fantastic benefits to be derived from it. And again, to be able to do and to be able to build a situation where you're dealing with your supply chain and you're digitizing the transactions across that supply chain, you really can't afford to do this with any single points of failure. or a single point of hack or single point of data breach, right? So therefore, a blockchain is absolutely perfect for that. And I do accept Toby's point that blockchain has been slow to emerge. There was a lot of written about it in 2016. It was going to revolutionize things in 2 months' time. But as we all know, new technologies evolve, right? They just don't appear the next day. But getting back to that, by looking at the way in which you do create the interaction between the participants, you really can't do that on a SaaS delivered platform, because at the end of the day, you're basically going to have some third party that's going to have access to that data, whether you like it or not, because they're providing that SaaS infrastructure, right? And by the way, this is just not the buyer to their suppliers. This is also for the bank at the same time. So what we're seeing, and it's really super exciting right now, is that the blockchain is starting to come out and starting to sort of progress from crawl to walk, right? And the area that we're really focused on is that digitization. And that's where a blockchain can really work, because if you imagine a blockchain, it's really a network of platforms where everybody has their own platform, and that platform can either run on-prem, or we would hope not, it can run on the cloud, would be better for us. And that, in fact, it's one of the reasons why we've partnered with IBM for FS Cloud, because of the additional Red Hat security around that. And if it is on cloud, then even the smallest supplier, for example, to EGA, for example, would have its own platform and would be only permissioning transactions between EGA and that supplier, right? And that works all the way up to the largest possible supplier. So if you think about this, and let's go to automotive, in an automotive supply chain, you've got tier one suppliers that are probably still using some form of EDI, which is host to host. That's not needed anymore, and they're really expensive to run. Likewise, you've got the very small supplier that you might want to do. It might even be a minority-owned business. It could be something that you're trying to support locally. They're probably delivering you paper, right? So to get rid of all that and to give the utility for them to actually transact in a very private and permissioned way with, you're going to use EGA as the example here, with EGA, drives tremendous benefit. Now, if you can actually use that data and the data between the contract or the purchase order and the invoice, just in simple terms, maybe with some logistics information, and that can all self-execute on an agreed contract that's on the chain that EGA has set up as part of their procurement process to say, hey, what we need to do, all of a sudden, you've gone and taken a mountain of cost out of the business going forward, right? And more importantly, also taking a mountain of risk, because again, to Toby's point, he mentioned, which is, I think, really valid, one of the hardest things for large buying organizations, which we call the hub, to do is actually to remain accurate vendor master data, right? And if you can actually now have the supplier that have their own platform that are permissioning that data in a way that's cryptographically proven to EGA, for example, and that can integrate back to their vendor master list and their ERP, they're getting some core information that's always updated. And if the network like us can actually provide initial screening, it becomes really valuable. Then you can start adding ESG data ratings against those suppliers. And of course, all of this permeates down to a more accurate and predictable payment and visualization of the payment across the network to the actual end supplier from the buyer. So,
exactly.
So to answer your question, at the end of the day, blockchain is ready right now, and we're getting a lot of companies that are actually going that way, but they're not going that way just because it's blockchain. They're going that way because they want to solve these problems, right? So, we don't even talk about blockchain. The blockchain is the enabler of what we're doing, but just like cloud's just as important to us, right? Machine learning is just as important for us to be able to drop in a PDF off an iPhone and have that actually digitized into structured data and actually return back and then match against the smart contract, all using IBM technology to do that, is really, really seriously cool, and it really works. So, yeah, it's ready. That's the statement.
Great, thank you very much, Rob. And I think it's interesting. So there's the digitization of the transaction request. There's the digitization of things like the purchase order, the invoice. There's a digitization of the shipping documentation. Clearly the big rocks that still remain, is the bill of lading and the bills of exchange that might be used. Could you talk the audience through why you see the ICC's new uniform rules for digital trade transaction as such an important milestone, and what does that mean in real terms? So, is trade digitization finally here? Could you talk the audience through what that is?
It's probably, well, this is going to happen on Friday. There's going to be an announcement sort of already out, but there'll be the announcement of this. And it basically, this all emanating came through the G7 initiative on electronic transferable records. It's massively important. In fact, if anything, it's something that's going to truly move the needle. There are still steps to take. So, for example, it's got to work under the model law of electronic transferable records, which has been adopted by different countries, some faster than others. And when that happens, we now have an opportunity where under a rule book and under a legal framework, there is a way in which the actual electronic record is transferable and is as good as, if not better than, a piece of paper, because of the provenance of that record all the way back to its origin, right? This will affect things like, for a bank, for example, it's going to really help with AML on payments, because you'll know that it's a true trade payment behind it, right? It's going to help within corporates as they actually approve payments and payables for payments against documents and matching these smart contracts we talked about before. It is really the single most important thing that's actually happened outside of having core technology to make all of this happen. It's the last step. So we're massively excited by it. We've been involved as a company with this for the last couple of years. And you know, we believe that this actually sets a framework up not only for cross-border. Obviously, it has massive effect for cross-border, but actually we've got customers in the US, for example, that are talking, well, this is actually a pretty good framework for us to work with our supply chain domestically at the same time. There are barriers at the end of the day that still need to be overcome, but they're going to be knocked down. I really can see the light at the end of the tunnel right now, and believe me, it's not a train coming at us.
Just on that, Rob, I think that's a really important part there, if I may, about the provenance of documents, provenance of the origination of these things. I mean, with certainly with the world going to work from home or remote working last year, I think that there was a huge intake or uplift of cybersecurity issues. And these didn't tend to be, certainly the ones that we witnessed in the region and elsewhere, didn't tend to be sophisticated scams. If I can use the old expression, it was a more updated version of the Nigerian letters that people used to get saying that their aunt had broken down or had died or something like that, or simply interception of email correspondence or malware around that. So anything to do with more secure encryption of the provenance of the documents in terms of how they're generated, how they are transmitted, certainly is going to be enthusiastically received, I think, by the corporate areas at least, more especially with cyber insurance now being almost impossible to purchase. And if you can purchase, it is hugely expensive simply because of the uptake of those cyber incidences or cyber-related instances. Well,
I think, Toby, look, the work that we're doing with Bank of America right now around this is the reason why we believe in everybody controlling their own database, everybody having their own platform on a network, and then actually securely transmitting and agreeing data between the participants is a much better way than actually piling it all into one centralized SaaS platform where, whether we like it or not, it's a single point of risk, single point of hack, right? Now, there could be great security around everything else, but for a distributed network, to do a hack, you have to go to every single node or every single platform. We're just not worth it, right, at the end of the day. And on top of that, if you look at what IBM's doing around, FS Cloud, which is Financial Services Cloud, where they've taken the technology that they got through the merger with or acquisition of Red Hat, this is really, really cool because you're layering an extra levels of security that honestly may not be required for a very small supplier that's just doing janitorial services for you or something, but it could be absolutely required when you're looking at the movement of bauxite and such shipments, right? So you can actually work in a hybrid situation across this, which is all based on data security at the end of the day. And I think that's the great thing that a blockchain offers, or a distributed network of platforms really offer at the end of the day.
Excellent. So on to the last two questions, practical steps. So Toby, for you, what are the practical steps you would recommend a treasurer to take if they're looking for ways to digitise?
So look, having some thought around that, there's probably the first one is just to talk to your IT director, your chief information officer, whatever you would like to call them, and hopefully they share the same passion and drive for digitalisation as you do. Yeah, they would be the first reference point for me in terms of a wealth knowledge bank, and they would be the ones that would ultimately partner with the business for any implementation. Secondly is obviously engaging with your FI providers and people like Bank of America or Rob to actually understand what's going on in the industry and in the marketplace. We're a mining, metals, aluminium company. We're not a high-tech, sophisticated IT startup. We know what we're doing, but we are heavy metal, heavy industry. So at the same time, we are always willing to learn from other people, and I think that's keeping abreast of what's going on, even just as general knowledge is key. And then finally, I think my only advice would be convinced yourself as to why you're going the digitalisation process or the digitalisation route. It's not for everyone. If you're running a small business with not too many interfaces, or even a medium-sized business, the investment in digitalisation can be costly, and in some parts of the world, it's cheaper to have people doing the job rather than employing technology. But my point being is understand why you're doing it, not just to be the first mover advantage because I like something shiny and new, but what value is it bringing to your business, and is it part of your strategy? And if it's congruent with your strategy, you can see it brings value to your business by freeing up resources to do more value accretive tasks in a more secure environment, then embrace it with both hands.
Excellent. Thank you very much, Toby. And Rob, same question. What would you recommend a company, a treasurer, do to think about digitization?
So from my point of view, we've got three things that we would do. I mean, obviously this is self-serving too, right? So please excuse me really if I do this, but
speak to Rob and speak to Rob.
Exactly. No, there are three things that I do. First of all, you want to make sure that you don't have to go and maintain thousands and thousands of bank accounts for your suppliers, right, going forward. So the vendor synchronization, vendor master, and how you can move that risk away and put it back onto the supplier in a way that works is a very quick, practical win. The second thing is to look at your external base. And again, to Toby's point, if you've got a lot of transactions and a lot of suppliers, there is a way now to actually digitize that process between them and start simple before you go complicated, right? And also remember, if you're going to do this, don't look at it by just saying, I'm only going to do this for the top 100 suppliers, because that's not where your real cost is. That might be where your value is and your money, but where you've got to look at the bottom, because that's where your real cost is at the end of the day, and processing cost, people cost, inquiries, etc. And then you need to couple it with the last thing, which I think is really important, and the work we're doing with B of A could be talked about later here, is then creating and executing payments which are delivered on a rail that really does give certainty of and visibility to the actual payment instruction that's actually generated on your platform as a result of this matching. So, the payment interface and how that payment interface works back into your core transactional banks is, I think, really, really interesting as well. So those are three things practically that I'd look at it. Again, mostly external.
Great, thank you very much, Rob. I think that those steps resonate with me. I think, Toby, your point around collaborating with the banks, partnering with them, seeking their counsel and guidance, starting with your technology partner, I think that's really, really key and important, particularly when you think about things like data security. Just because it seems like a good idea, is it actually a good idea, and is it going to increase risk in your business, etc.? I think, Rob, to your point, start simple. That's definitely an ethos we have at Bank of America. Just sharing on our side, we have launched what we call the paperless trade task force internally, where we are looking at all aspects of trade finance processing. We're looking at the paper we receive, paper we send out, the paper we generate internally, and we took a big inventory, and it's quite eye-opening when you realize what is being created, and you chip away at things. So we've really looked at marginal gains across all these different areas, and actually over the last 18 months we've cut paper by about 50% within our business. And a lot of that is working with our clients. Do we need to send out paper invoice? Can we just send a PDF invoice? Can we send something digital? If a client's issuing letters of credit, do they need all those documents? What's the core set of documents they need under a letter of credit? And in fact, if there aren't bills of lading or documents of title in general, do they need to see originals? Can they see copies? Can those copies be presented as PDF and things like that? So we've really kind of worked with clients as well to look at all the aspects of our end-to-end and channels. Toby, you mentioned channels. I think it's a really, really good point. I think, as we look at multi-bank channels, that is less prevalent, but there are certainly multi-bank channels out there that banks can work with and do work with, and that one step of transaction initiation and submission, there's an opportunity to take a paper application form out of the business process. Maybe that PDF is, that application form is scanned and sent, but there's still a piece of paper being generated. But do you think about your bank
risk diversification though as well?
Yeah. Sorry, Toby.
It's all about diversification, and it's about partnerships and diversification at the end of the day.
Yeah. Actually, and Duncan, one thing that I didn't mention before, to Toby's very, very first point, and that is having siloed, platforms that you can join doesn't really make a lot of sense. And that's, again, one of the advantages of a distributed network of platforms is that at any time a participant can permission in somebody else. So you could have, Duncan, you know this, so I can say it, you could have, 15 banks that are there, and then the transactions are permissioned to those particular banks. So it really works well for a large corporate, but likewise also for logistics providers. You're not always going to use the same logistics provider that's providing information, or the same insurer, right? Or certification authority, right? So there's many things you can do to build and bust out that ecosystem as you start to get more sophisticated and make it more of a multi-participant permissioned ecosystem, rather than I'm sitting on one platform, everybody has to join this platform.
Indeed. So we've got a few minutes left for the panel. I think we've probably just got time for one question before we close. Do we think there are any regions that we see moving faster than others on trade digitization? I thought that was an interesting one. Toby, Rob, any views? Toby?
Look, I can really only speak for my part of the world, which is Middle East, North Africa, in terms of who I see exploring the boundaries of that. And like a lot of things, we're a fairly new economy, especially in the UAE. And when we do digitalise, we do like to digitalise very, very quickly. We have the expo coming up, I think, in 2 days, and the whole thing is about sustainable digitalisation into the future. So it's quite apt. And some of the things that I do see that we adopt here are certainly light years ahead of certainly even Australia. So I think once we start to embrace the concept of blockchain, distributed ledgers, digitalization, then it will take up really, really quickly. I'm pleased to hear Rob talk about the US. It's not my experience, the land of the checkbook still. Certainly our experience in the US is slightly different in relation to their embracement of technology, which is very, very strange. But there are some good financial reasons why they do that. So look, I think each economy, each corporate will go at its own pace, and what pace is acceptable to them. But I'm just pleased that it's getting some airtime and we're making some progress.
Excellent. Rob, probably about 1 minute to give us thought.
I mean, just real quick, I don't see it from a regional point of view. I see it more from an industry clusters, and I see it more from the culture within a large corporate. I mean, we focus on large corporates as if you like, the anchor of that their ecosystem. And there's no doubt that the US is actually changing a little bit here, Toby, which is really pleasing to see. But equally, Africa, Singapore, it's all over the place. But it really comes down to industry, and it comes down to the culture within the corporate itself to make that change.
Great stuff. Well, thank you so much, Toby and Rob, for joining me on the panel today. Really appreciate the time, and hope everyone found this useful. And hope you enjoy the rest of the conference.
Perfect.
Thank you very much. Thank you very much, Duncan. Thanks, Toby.